All right. Today is Wednesday, June 4th. This is a recap for the stock market activities today. And folks, I got a good one for you tonight. You know what I want to talk about tonight? I want to talk about, because the market is complacent. There is absolutely no doubt about it. Nobody wants to sell. And the market right now is left to the algos and the zero DTEs with the buying bias. So it's been stuck, but floating higher. And we're waiting for that psychological battle. The sellers need a reason to step in. Maybe they got a little bit, but not enough. The buyers on the sideline need a reason to step in. And until then, we're going to be stuck. The question is, who's going to get their reason first? That's the most important question. And the reason for the sideliners to buy the market is closing above 6,000 in the S&P 500 futures, which appears right now, at least based on the close that we got in the session, that we're probably getting rejected off that level. No confirmation yet, but it is starting to look, let's say, a little bit worse for folks who are betting on an upside breakout. We have 4 threats, immediate looming threats, that could spoil the party, kill the optimism, give the reason to the sellers to step in first. And we could see one of the biggest traps in stock market history if that happens. What are the 4 looming threats that we have right now? Number 1, the bill. Number 2, China trade fallout. Number 3, the macro. Number 4, the geopolitics. We'll talk about them one by one, but a lot of experts right now are saying that the taco trade is becoming dangerous. Again, something that we talked about a week ago. Now, all of a sudden, the experts are catching up and saying that the taco trade is overdone. It's probably going to backfire. And the reason is the taco trade has one major assumption. And that one major assumption is, at the end of the day, President Trump was not serious about any of these tariffs or any of these threats. And at the end of the day, he's just going to say, folks, joke's on you. I was just playing a game here, and I'm done with it. And no more tariffs. Goodbye. That's what the taco trade is betting on. The taco trade is betting on full surrender by the administration when it comes to the tariffs. So anything that goes opposite to that, all of these taco traders are going to get burritoed. So without further ado, folks, let's explore these threats in details in the segment we call the Headlines of the Day. The looming threat number 1 is the bill. And today, Reverend Elon Musk came out on Twitter, said, call your senator, call your congressman. Bankrupting America is not okay. Kill the bill. Well, gee, what did Uncle Mav say about a week and a half ago? Before the clowns at the House passed the bill, I said, kill the bill. Kill the bill. And a lot of you said, Maverick, you don't know what you're talking about. President Trump knows what he's doing. There's this master genius plan that's going to happen, and you're just being overly critical of the president. Well, now even your boy Musk agrees with me. Why? Because I'm rational. I'm not saying things based on emotions. I'm saying things based on rationale. And those who are stuck in the emotions land are not going to see eye to eye with me. It's going to take you a little bit of time, but look at what's happening. Even Rev Musk now agrees with me and coming out publicly and saying, kill the bill. Now, what's really interesting is what's happening in the whorehouse in D.C., because you have all of these Republicans who had a lot of reservations about the bill initially. And there was the whole fiasco in the House. We're not going to pass it. That's the deficit. Then Trump came out to Congress 2 days in a row, and he whipped all of these politicians with a threat. Either you do vote on it or you're dead. You're going to be a political target. The majority capitulated, and some pretended to fall asleep to escape the responsibility. And now we know that these Republican Congress whores passed the bill without even reading it, because the boss came down and he was super angry and he threatened all of us, pass or else. So we just passed. We didn't even read the bill. Are we paying you so you can pass shit without reading? Come on. And now, of course, Rev Musk is attacking everybody who passed the bill and voted for it. All of a sudden, these whore politicians are coming out and saying, oh, I was duped into it. They rushed us and I couldn't read all of these provisions that add to the deficit. Why are they talking like this right now? Because Sugar Daddy Musk is saying, I'm going to cut you off. All of a sudden, money talks. Who's the biggest John? Sure, the president threat is serious, but they're looking for money too. So that tells you exactly what the problem is with our politics right now. And of course, this is going to get ugly because Elon Musk is now head-to-head against Trump in the big, beautiful bill, which Musk calls the disgusting abomination bill. So now we're getting the news. It's just a matter of time now. The President Trump is losing patience with Elon Musk. So I'll give it about less than 2 weeks. I think I'm being too generous here. Probably a couple of days. And you're going to hear Trump calling Elon Musk a dog in ketamines, and he begged me for this, and he wanted me to do a favor that. And sure, Musk has his own reasons against this big, beautiful bill, aka the disgusting abomination bill. It cuts off his Tesla from the government subsidies. But I don't think that's the reason motivating Musk to oppose the bill. I think he genuinely cares about the deficit, because any rational person that looks at the situation that we got right now says, are you out of your minds? You got a problem already with the debt. You want to add to that problem? What's the matter with you? And everybody's going to get punished. The rich, the poor, anything between. If we keep kicking the can down the road, we have to eat the pain now to avoid it later. So with the opposition of Musk, what's going to happen to the bill right now? It's in the Senate's hand. We know that Rand Paul is not going to vote for it right now at the current form. Ron Johnson, Wisconsin, probably not going to do it. Now that Musk is opposing it, he has support. And probably going to find another third senator who's not going to vote for it, and the bill stalls. And a lot of GOP senators, by the way, will become really, really concerned that if they pass the bill, they're destroying the party's reputation. The only reason we're voting for them is fiscal conservatism. You abandon that, what's the difference? Same thing when the Democrats abandoned the anti-war stance. Okay, what is the difference now between you and the other warmongers? You're not giving me any choice as a voter. So this is going to be, as Rand Paul suggested, this is going to be on the GOP. If we pass this right now, he said, that's going to be on us, that we added to the deficit. And any problem that happens from this point on, all of a sudden, by the way, all of a sudden the mainstream media is concerned about the national debt, is concerned about the deficit, is spitting the truth about the economy. All of a sudden, I wonder what changed. This is the toxic bullshit that happens in this country, when we don't have any objectivity at all. It's all about stupid political biases. But anyhow, back to the bill. How would this bill pass? It has to be adjusted now. With Musk going crazy against it, it has to be adjusted. Okay, how do we adjust it? They will have to cut more benefits to reduce the deficit, and reducing spending, that's recessionary. And we know the stock market is addicted to debt. The stock market loves budget deficits and financial irresponsibility. But when you begin to tighten the belt and you begin to cut spending aggressively, you reduce the growth, and the market begins to freak out. The market doesn't love tighter fiscal or monetary policy. And the other side of adjusting the bill would be, how do we increase revenue? Okay, we can cut a little bit here, a little bit more there. We can do austerity measures. We can punish all of the poor and the folks waiting on Medicaid or whatever. But how do we increase the revenue? What if they agree that, yeah, we're going to raise the taxes on the corporations a little bit, as I suggested yesterday? Or we're going to increase the, most likely, because they're owned and controlled by the corporations. So the most likely scenario in increasing revenue is to punish the individuals, to say, oh, we're going to tax the 1%. They call it the 1%, but by 1%, they mean if you make over $250,000, which is nothing in some states and some locations in this country. As a household making $250,000, that's nothing if you're living in San Jose. And taxing the rich, the problem with that is it is not market friendly. It's a good way to raise revenue. I still think that anything above 37% is just pretty much tyranny at that point. But let's say they do it. What do you think the reaction is going to be in the market? If you're rich now, if your stock portfolio is up, you better sell right now before they increase the taxes on you. And that's net negative for the stock market. So we go back to the board. Looming threat number 2, China trade fallout. Today we got the headline. And by the way, it came overnight when everybody was asleep right here. So it came out China time. Why is that important? Hold that thought for a second. But in the tweet, Trump came out, said that it is extremely hard to make a deal with China's President Xi Jinping as trade talks stall. He said he's tough. It is hard to make any deals with him. Now, this is really important because in the beginning of the week, and even before the beginning of the week, what kept the market intact is this hope that, oh, the president is going to call Xi and somehow they're going to make an agreement. So the market said, okay, it can't sell right now because what if this phone call produces something that is productive or somewhat of a solution, a blueprint, if you may. And the market been holding, waiting for this Xi call. Now, they said it's going to happen Wednesday. So my guess is the call already happened since Trump tweeted in China time, not in USA time. He spoke with Xi, and most likely Xi told him that he's not interested, that the trade doesn't make sense to him, so get lost and why don't you go to bed already, Donald? But rest assured, the administration now says, no, we have the phone call is actually going to happen Friday. We're going to call Xi Jinping Friday. Okay, Let's wait Friday to see what happens. Now, I don't think anything good will happen. I don't think we're going to have any agreement with China. China has no interest at all in making a trade deal right now, especially from a position of weakness. They have no interest at all. When you think about it one way, with the court battles, if you're China, why would you make a deal right now before the deadline? Maybe you want to wait and see what's going to happen with the court battle. Number two, at the end of the day, he's going to lose the majority in Congress by 2026. So it's about a year from now all the way to the elections. We've endured pain from a recession for 3 years right now. Can we endure a little bit more pain for about a year? So they have no interest or any reason to make a bad deal right now. And this is why we see the headline from the Wall Street Journal saying that China new trade negotiator is ready to play hardball. And that aligns with Trump's description of Xi as tough to make a deal with. On top of that, all of this sort of a chauvinist kind of behavior by this administration against China, they're not going to make a deal from a point where you're going to humiliate them. They said that repeatedly, not interested, not going to do it, never going to happen. So you have, for example, little Marco, the Secretary of State. He issued this tweet just yesterday, criticizing the CCP, talking about Tiananmen Square. The hell do we care? You think they're going to make a deal if you put out a tweet like this? They're still pissed off about the peasant comment by Vance. You add to it the fact that we're banning Chinese students from coming to the U.S. and studying our colleges. Not only that has a massive economic negative impact, as you can see, huge contribution by international students to the top universities in the U.S., including, by the way, you don't see them right here, but the public universities. Lots of that money that is reducing the tuition for the U.S. student is coming from money that international students pay. So banning them has a huge negative impact on the economy, but banning Chinese students, it's about 20-30% of the international student population. It's not just economically damaging, but it's also going to bring out the question of how would China negotiate when you're banning their students? That's leaving a bad taste in their mouth. They're not really interested in making a trade deal anytime soon. On top of that, we have all of this talk right now that Xi Jinping's daughter has to be deported from the U.S. I don't know if she's still living in the U.S. or not. My hunch is she's in China. But I mean, all of this is happening, and you really think that the Chinese will come to the table and say, you know what, let's make a deal, USA. Let's make a deal when you're doing all of these threats and all of this stuff that we don't like. Never gonna happen. They said that repeatedly, and I don't think they got tacos in China. We're not gonna make a deal from a point of humiliation. And this is why in my Maverick conclusions last week, I said that we're in the process of decoupling from China, which leads to number one, which is the tariffs are here to stay. The entire market rebound is based on taco. The entire market rebound is based on full capitulation when it comes to the trade war. I don't think that's going to happen. I mean, the administration has no goals from this trade war. There's nothing defined. So even China, Japan, EU, whoever we're going to talk about, without us defining the goal, they have no idea what the hell do we want. We don't have an idea what the hell do we want. Take a look at the encounter today between Senator Kennedy, Republican, and another one, who's now questioning the sanity of the economic policy of this administration. Not me saying it. Elon Musk is saying disgusting abomination, kill the bill. And now we have Senator Kennedy, Republican. And he's criticizing the lack of goal from this trade war. Here's the exchange between Senator Kennedy and Commerce Secretary Lunatic. Take a look.
If Vietnam, for example, came to you tomorrow and said, okay, Mr. Secretary, you win. We're going to remove all tariffs and all trade barriers. Would the United States please do the same? Would you accept that deal?
Absolutely not. Okay. Absolutely not. That would be the silliest thing we could do.
Why is that?
Vietnam has a $125 billion exports to us and imports from us $12.5 million. And you're thinking, Vietnam exports $125 billion?
I'm aware of the figures, but tell me.
But where do they get it from? They buy $90 billion from China, then they mark it up and send it to us.
So they're
just a pathway of China to us.
You wouldn't accept that deal?
No, it's a terrible deal. We're the one with money. We're the one with the store. Of course they want us to take down.
What's the purpose of reciprocity then? Is reciprocity not one of your goals? Are you telling the president that we shouldn't seek reciprocity? If that's what you're telling him, Why are you trying to do these trade deals?
What do we want? We want to encourage Vietnam to produce products they're great at producing.
But I want to get back to reciprocity. You just said you don't believe in you don't accept reciprocity as a goal. What are you negotiating in these trade deals?
Why would we open our bank account and their bank account when ours is 10 times bigger?
Why are you negotiating trade deals? You're trying to get other countries to lower their tariffs and trade barriers in return for us lowering ours.
That's true for the things that they'll take from us.
That's called reciprocity.
Of course.
So are you or are you not seeking reciprocity in these trade deals?
We are absolutely seeking reciprocity with respect to things that can be reciprocal.
But you just said
when they're importing from China and sending it to us, they're not.
You just said that if a country came to you and offered you the ultimate reciprocity, no tariffs, no trade barriers, in return for us doing the same, you would reject that.
Of course, because they buy from China and send it to us. Don't you agree with me?
Suppose they said we won't buy from China.
Now we're talking. If it was Vietnam,
would you accept that deal?
We would consider it. For what things? For
what
products?
What would you want to change?
Well, there are certain products we want to reshore. We don't want other people making them. We want to make pharmaceuticals here.
Right.
We need to protect ourselves for certain things.
Let me ask you this, because I'm going to run out of time. Our trade deficits, are you advising the president that trade deficits are always bad in every situation?
No.
Okay. When are trade deficits good?
Trade deficits, for instance, let's say there was a company that had the cure for cancer. Let's call it Cancer Cure. And we were buying it and it was located in another country. We would obviously have a trade deficit with them because they have the only one of it. An example, our technology companies, our great technology companies, we're the only ones with it.
So a trade deficit is okay if they're products we really need.
If they're the only ones with it and we can't do it, then of course it's fine. But if we can do it, then we darn well better think about whether we're supposed to do it and whether we want to do it and if it's in our interest as a country to do it.
Here's what I'm getting at. I've heard you say that strike that. I'm running out of time. I want to come back to another subject. Tell me your understanding of the Trade Expansion Act.
I don't have a really good understanding of the term. I may know the act, but I may not know its title.
You're not familiar with the Trade Expansion Act of 1962?
So again, Lunatic has no idea what he's doing, and he has no idea what the goal is. And all he cares about is just lining up his pockets. He got all of these patents, over 900 of them, and all he does for living is sue somebody when they have anything that could be considered as a patent violation. In other words, the guy's a lowlife, and he's probably juicing all of these patents for money, government money, taxpayer money, and they're all getting rich. You got Trump doing the crypto scams and lining up his pockets from the Middle East, and then you got Besant doing insider trading. So joke's on us at the end of the day who believe that somebody actually cares about us or about this country in any administration, not just this one. But let's go back to why do I think that the tariffs are here to stay? What is the goal from the tariffs? Well, Lunatic just says that it's not reciprocity. Vietnam can cut the tariff rate to zero, and that's not going to be enough for us. Okay, so if it's not reciprocity, what the hell is it? That leads us to perhaps the second reason, domestic job creation, aka bringing back manufacturing to this country. Well, that's going to require the tariffs to stay. Number 3, if it is closing the trade deficit, what does that mean? We're not going to ask Vietnam to buy billions and billions of dollars from us. They can't afford it. We're going to have to import less from Vietnam. How do we do that? By making more in this country. How do we do that? By keeping the tariffs. That's the only way domestic manufacturing and production is going to gain any advantage over Vietnam, China, Cambodia, Taiwan, Thailand, whatever you want to throw in there. What if it is about national security? As in a previous interview, Lunatic said that's the reason. What does that mean? National security means you have to bring manufacturing back home. What does that mean? It means that the tariffs have to stay. So you can twist yourself in all directions. And none of the reasons say that the tariffs will be gone, as the TACO trade suggests. If anything, all of the reasons say that the tariffs are here to stay, absent of full surrender by the administration, which I don't think is going to happen. So how do we play it? Well, of course, if let's say Friday Trump comes out and says, I called G and he told me to get lost, and we're not going to make a deal. Matter of fact, I'm going to increase the tariffs against China by 50%. If that is the case, market is going to go down. That's one trade you can do. But thank you to our viewer, Jeff, who suggested today that we do the rare earth metals play. So the ticker USAR and the ticker MP, any play really in domestic rare earth metals would work out and would actually move higher if we have a fallout in the trade deal with China. Why? Because we have to produce more. They're going to use their supply as a weapon and cut us off. So we have to produce more here. The government has to invest more on the miners that we got right here. So that's one play, and we'll discuss more as we get closer to Friday. But for now, let's go back to the board. Number 3 in the looming threats, the macro. What did we get today? We got the private payrolls, the ADP. And the forecast was that the private sector of the economy created 110,000 jobs in the month of May. The reading was only 37,000 jobs. So we're short here in a big way. And the market took that as a recession signal. How do we know that? Because the market bought bonds today. You saw the TLT going higher. You saw bond yields going down. And of course, the president reacted right away by blaming Powell. He said the ADP number out. Too late, Powell. I like stiff Powell a little better. But anyways, too late, Powell must now lower the rate, capital letters. He's unbelievable. Europe has lowered 9 times. So he's asking Jay Powell to lower the rates. Well, Mr. President, if we continue to get recessionary data, the rates will go down either way without Powell. So again, the solution has always been accepting a recession, which nobody wants to accept. And the sooner we do, the better it's going to be. The longer we kick the can down the road, we're going to face the inevitable anyways, but the consequences will be more devastating at that point. How do we get a recession? You got to crash the stock market because the majority of spending in the economy is happening by the affluent consumer, who's heavily influenced by the stock market performance. So again, accept a recession, crash the market, you get lower rates. If the Federal Reserve lowers the rates artificially, you might see the lower end of the yield curve going down responding to the Fed, but you might see the longer end of the yield curve, which what really matters, the 10 to the 30, actually moving up because the market's reading would be, wait a minute, he's cutting rates while we have all of this inflation threat by the tariffs. And that's going to make it worse. And here we go, we lost another ammo. You got to remember that Jay Powell wasted a bunch of ammo by the stupid cuts that he did last year. We cannot lose more ammo because while we have a lot of recession signals in the economy that could lower rates, maybe could merit the Federal Reserve to lower rates. At the same time, we have an inflation problem. We'll talk about the inflation problem in a minute, but let's continue with the recession indicators that we got today. So in the last couple of days, we got earnings from Dollar General and Dollar Tree. That's the ultra poor kind of consumer. Visitations to these two stores are surging higher, and they're surpassing overall retail right now. And I suggested that if you do Goodwill, which is Goodwill is pretty much charity at that point. I got to tell you that I went to the Goodwill store over the weekend because I was cleaning my garage. I had to donate a bunch of shit. And I noticed that the parking lot was full. There were a lot of people in Goodwill at 9 o'clock, 9:30 in the morning. And out of curiosity, I went to the store and I saw regular families with kids shopping at Goodwill. It's a family that came out of a Tesla car, so they're not living in the street. And I was just curious about this. And I said, hey, do you guys shop here often? Said, no, we just started last month. I said, why? Well, because we cannot afford the regular store. We can't afford the TJ Maxx, the Targets, even the Ross stores. We can't afford any of that. This is the only thing we can afford. This is a sign that the consumer is weakening dramatically. And this is why we said that I say a lot of things here and you folks don't listen. And then you say, Mav, you never tell me good stuff, good tips. What did I say? In a period like this, you got to look as an investor for stores, a kind of products that the consumer would downgrade to. What do I mean by that? Walmart, for example, said that we're seeing the phenomenon that the affluent consumer who can no longer afford the Whole Foods and the other expensive stores, they're now shopping at Walmart. They're downgrading. And the folks who used to shop at Walmart are now shopping at Dollar General. The folks who used to buy Louis Vuittons are now buying Coach bags. And these stocks are doing pretty good because they're seeing more volume of sales. So sure, today Dollar Tree was down, but it was on the heels of massive gains in the last few weeks. And Dollar General popped by double digits when we got their earnings yesterday. Listen to this now. Dollar store chains have seen an influx of higher income shoppers in recent months as economic uncertainty surges and households look to save. According to the CEO of Dollar Tree, Michael Credon, I think that's his name, says the higher income customers have been a meaningful growth driver for us. Specifically noting that the chain saw an increase in customers with household incomes of more than $100,000. The company reported that same-store sales rose 5.4% in the first quarter, with improvements across all income levels. If you make $100,000 and you got to shop at the dollar stores now, what do you think is happening in the economy, folks? Forget about the market, because the market will respond suddenly. What's happening in the economy around you? You think that's not going to show up in the market? Think again. Continuing. Earlier this week, Dollar General told investors it saw the highest percent of trade-in customers in the last 4 years during the first quarter. The CEO said the company saw increased trade-in activities for consumers who would typically shop at a higher cost competitor for middle and high-income customers who came to the dollar store or Dollar General in this case. Same-store sales grew 3.4%. So, in my opinion, DLTR, the one that I own, is doing better because the same-store sales in DLTR 5.4%. DG's 3.4%. Anyhow, you would say now, Mav, we have all of this threat about the recession, weaker jobs data, the consumer is getting broke, yada, yada. So that means that investors are going to flock to buying bonds and interest rates will go down and problem solved. Not really, because interest rates will only go down if you eliminate the inflation threat too, not just exacerbate the recession problem. What did we get? Because you got to remember, we got stagflation right now. What did we get from the inflation side in today's data? Here's the services PMI. Suppliers raising their prices. The input cost inflation accelerated steeply in May to its highest since June 2023. The output charge inflation, the highest since August 2022. You look at the ISM number, prices paid were positive by more than 3 points, while new orders were down by more than 5 points. And you gotta remember, this is a little bit outdated, but you gotta remember that the price paid index in the ISM services is a leading indicator for the CPI and the core PCE inflation. You see the correlation right here. In ISM services price paid, this is lagging. This is not even including today's reading. Is suggesting that the CPI is heading higher. You look at core CPI, according to the the ISM services price index, it is showing that core CPI is going to move higher. So this is problematic, folks. This is problem not solved. You got to resolve the inflation problem too. And we're only going to do that if we eliminate the tariffs, number one, and crash the market to damage the affluent consumer. Let's go back to the board. Looming threat number 4. And this is the one that scares me the most because it has more ramifications and it could happen suddenly. What am I talking about? Specifically in the geopolitics. We did a big geopolitical coverage Monday. But today, President Trump called Russian President Putin. And in an hour-plus phone call, Trump came out saying that he predicts no immediate peace between Russia and Ukraine. In other words, things went down the toilet, and it is getting ugly now. In the same phone call, President Trump said that Putin reiterated that he's going to retaliate against the recent Ukrainian strike, against the strategic nuclear bombers. He has to respond, and the response is going to be shock and awe. It has to be big, and I'm even suggesting that they could use tactical nuclear weapons. And then what happens? What do we do at that point? Is the market prepared for such scenario? Or are we just drowning with complacency? That if we wake up overnight and we see that indeed Russia attacked Ukraine in a big way, we begin to panic all of a sudden. The bottom line is with all of these threats, the taco trade makes no sense. And it's going to take one of these 4 looming threats to fall apart, to show up in the picture, and the market will flush down right away. So you better get these FOMO traders to hop in and get that 6,000 close in the S&P before one of these 4 factors show up in the picture. Now let's add more color to this conversation by revisiting the market activities, beginning with the closing of the indices, and here we go. The diamonds closing in the red, down 91.90 points, or a decline of 0.22%. On the other hand, the NASDAQ, aka Meta, the rest of them were down, Meta, and a little bit of NVIDIA. The NASDAQ was positive 61.53 points, or a gain of 0.32%. The S&P almost flattish, a tick positive by about 0.44 points, or 0.01%. Your leading indicator, the Russell 2000, closed negative, down 0.59 points, or a loss of 0.28%. Now, looking at these sectors all in all, you can see that we have comm services, aka Meta, was the only heavy lifter today. NVIDIA a little bit with that, but besides that, we haven't seen a lot of gainers today. We see metals rebounding, copper and gold miners. Technology, that's NVIDIA's contribution. But then you look at the laggards today, you have energy, you have utilities, you have financials and defensives. So there is no theme right now besides the recession theme that is impacting energy, and it should be positive for utilities. But guess what happened in utilities? We've now injected utilities with the AI data center mania, with GE, Veranova, and Constellation Energy. When these names go down, the rate is getting bigger and bigger in the ETF. So when they go down, they drag the entire utilities ETF down with them. And this is why I said if you're an investor looking for defensive positioning, traditionally your manager would say let's buy the XLU, utilities. Your response should be no. I got to buy an individual utility stock that is old school, that is actual utility, because the AI data center mania, it could go as high as it can, but at some point it's going to come back down crashing as we hit to a recession. And a classic utility is going to do the job as defensive better than the AI data center mania within utilities. Looking at the breadth, the NYSE 41% advancing, 57% declining. The NASDAQ 48% advancing, 49% declining. All in all, neutral, which means the market maker won today. They made the majority of calls and puts close out of the money and negative. Looking at the heat map, once again, you can see the majority of the outperformance today came from Meta, a little bit from the chips, just a tick from NVIDIA, a little bit of AVGO in Taiwan. AVGO has earnings coming out, I believe, tomorrow after the bell. And then we have some positive performance by Eli Lilly in healthcare. We have the Chinese names going higher, like Alibaba, about 4%. Don't ask me to explain that for you when we have all of this bad trade news. But we have decliners, utilities, we talked about that. Energy, that's your ADP report impact. But you have Tesla, that's your kill the bill impact. You have financials down, JPM and the regional banks, because interest rates went down for the wrong reason. And a lot of these companies are making money from interest income. And then you have some of the speculative names like Palantir also down. So it's beginning to look as we want to go defensive. And we're running out of names to hold the market right now. Looking at the heat map for the ETFs, TLT up, meaning yields down. That's your recession impact. Should that be really good for small caps, mid cap, value? Of course not. The only sector that is closing positive, large caps, thank you once again to Meta. The international equities, as the dollar goes down, they work out. We see gold, we see silver moving higher, gold miners. But look at cryptos underperforming even though the dollar was down. Are cryptos now predicting a risk-on correction? Really good question. I got no answer for you. We're going to find out when we find out. Moving on to commodities. Declines in energy because of that recession fear that came from the ADP. You have some declines in some softs. I think that's also related to some of the recession fears, although coffee rebounded by about 1.5%. But of course, when the dollar goes down, metals are doing pretty good. The exception today is palladium, but we'll look at the chart in a minute. But copper, platinum, silver, gold, all positive. Likewise, the grains are sensitive to the dollar, so when the dollar goes down, you see wheat, rough rice, soybean meal all going higher. We see foreign currencies like the yen and the Swissy moving higher, so we look at some of these charts right here. The FXF is the Swiss ETF. This is for the franc, of course, the currency. The weekly suggests that we have a bull flag breakout. I think that the RSI corrected a little bit, gave us that little pullback, but it's now ready to firm up again. You look at the FXY, the Japanese yen, weekly chart. You can see the same thing, that we've been consolidating for a little bit in the cup and handle. Now we're beginning to break out and play out that cup and handle pattern. Look at the RSI. Still got room to go higher. On the other side, look at the US dollar. Weekly chart, to my eye, this is looking like a breakdown. And we still got room in the RSI to get oversold. We're not there yet. So the suggestion is the dollar goes down and these foreign currencies go higher. If the dollar goes down, what do you think the old man is going to do? You're looking at gold futures right now. Inverse on his shoulder, I think we're going to challenge 3,500. You look at crude oil. Despite the fact that it was down today, we've introduced recession fear. I thought that crude oil did pretty good today. It's actually consolidating above the 50 days moving average in a bull flag pattern. Why is that? I think folks are betting that we're going to see a geopolitical event happening really, really soon. So oil shorts are using any drop to cover their shorts. You got to consider the news that we got, not just from Russia, Ukraine. We're waiting for the Russian retaliation, but the news that we got from Iran today. The Ayatollah came out and said, you know what, we're not going to have a deal because the deal requires to stop enriching uranium. We're not going to do that. Okay, then there is no deal. And does that mean that Israel will take initiative and bomb Iran's nuclear facilities? Maybe that's what the traders are seeing right now. You look at other assets like wheat. If you look at the daily chart, we have a breakout of the falling wedge. Then we have a little bit of consolidation underneath the 50 days moving average in an inverse head and shoulder pattern. So as we said over the video from Monday, you got to use some of these alternate dollar assets, be it currencies, be it commodities, and add them in your portfolio. Moving on to the big casino options, what do we see here? The volume is still shy. Everybody's waiting for a resolution, a breakout, or a breakdown. But we see the volume concentrated in NVIDIA and Tesla, the most popular names. Heavily, of course, the calls overwhelming the puts. There's no surprise, and this is why we see the market floating its way a little higher with little volume, of course, every day. In looking at the volatility, the IV ranks, the IV percentile, which stands out? We got NVIDIA standing out because we have the lowest implied volatility that we've seen in NVIDIA in a long, long time. What does that mean? If you want to short NVIDIA, these are the cheapest options you're going to find, put options. If you want to go long NVIDIA, the cheapest calls you can buy right now. But then you look at names like CoreWeave, where we see 96% in the IV percentile. That's going to pull back in a big way really, really soon. Now, it could continue to hold higher or move a little bit a little bit for CoreWeave means like 10%. To make that IV rank also in the 90s, at that point, it's going to be all in selling naked calls. But it is a dangerous strategy. Please don't do it. You're going to get killed if you don't know how to manage it. This is the high risk category. Anything else stands out? Meta's options are relatively cheap. You see 25% in the IV percentile. You see 9%, about 10% in the IV rank. So if you think that Meta is going to flip back in the red, maybe this is the time for you to buy some put options. Let's do the unusual activities, beginning with the bullish ones. How about the EWZ, the Brazilian ETF? Dollar goes down, international markets go higher. And somebody's betting on more gains to come in the EWZ Brazil. They bought the 28 calls, the expiration date July 18, expiration date 25. All in all, spending about $3 million. So the stock right now trading at about 27.5. They're bidding for 28. So to me, this looks like it's somebody who wants to buy the stock using call options. Got another one for you here, a bullish one for Carvana, CVNA. It's in the land of insane that we see it trading higher on bad fundamentals and insiders dumping by the billions as the stock goes higher. But somebody's now betting on more squeezes in Carvana. Stock is trading at about 340. The trader here is betting for 370. The expiration date is July 18, 2025. Spending about $2.25 million. My advice is, a lot of you message me in Discord, should I short Carvana? It went way too high. I think it's a short. I think it's going to go down. Even if it is, you got to understand the market maker priced in the calls and the puts with consideration that Carvana could drop 10, 15% in a day. So you're not going to outsmart the market maker by timing the top in Carvana and buying puts. You're not going to beat the market maker in chasing and buying calls. I think the best thing you can do here is neutral strategies or selling covered calls if you own the stock, or selling naked calls if you're really, really experienced, or perhaps selling call credit spreads if you're not that experienced. These are the only options you can do right now. So stop fixating on this name. You got plenty of other names to trade. Let's do the bearish ones, beginning with META Meta. Stock is trading at about 680, 690 right now. The trader is betting for a correction all the way down to 660 puts. That's what they bought. So they're betting that it's going to go a little below. For the expiration date of August 15th, spending about a little over $1.5 million. Now, if we look at the other one here, SPX, the cash index for the S&P 500, really interesting because right now we're trading at about 6,000. Somebody bought the 5,920 puts. That's the main leg of the trade, closer to the money. For the expiration date is September 19th, 2025. They added a booster to it with a shorter dated expiration, July 18, 2025, and they went a little bit out of the money, a little bit more, 5,645. Which means they're betting on the top, and they're betting on a steep decline in the S&P 500. All in all, spending about $25 million. Let's do the Qs. Somebody's doing a short call. Really impressive strategy. But again, you gotta be experienced. You gotta know what you're doing. If you don't know, you will get nuked. Not just killed, but nuked if things go wrong. So be careful before you sell any naked options. You gotta do a lot of homework. You gotta have a lot of experience. But the trader here probably has the experience because they sold the 550 calls. The expiration date, July 11, 2025. On the Qs, all in all, netting a credit of about $4.25 million. What is the call here? The Qs will never make all-time highs. The Qs by July will be down or not even close to the highs. And they're raising a good amount of cash, selling a naked call with high odds of winning. Then we got another bearish one for you in another index, the IWM small caps, trading at about, let's say, 208 as of this evening. And then you have somebody buying the 200 puts, the expiration date July 3rd, 2025, spending about $1 million. Now, if you get a spike in bond yields, the IWM doesn't like that. If you get a flush in bond yields for the wrong reasons, aka a bad jobs number, the IWM doesn't like that. So Friday's session is going to be really, really important to say the least. Now let's segue and do some charts and then wrap it up, beginning with the E-mini futures. What do we do here? We don't have a close above 6,000 to trigger the FOMO trade. We don't have a loss of the 200 or let's say 5,900 to say that we have a double top and down she goes. So we have to continue to wait and see. Now, if we look at the NASDAQ, it's above the 200, above 21,000, so looking a little better than the S&P 500. But zoom in a little bit more here. Are we forming sort of a rising wedge? We have a flush down coming soon. That risk has not been eliminated yet. We look at the RTY, Russell 2000 futures. A lot of you are saying, Mav, I want to buy the Russell 2000 because Tom Lee said it's going to go to the moon. Maybe what you're looking at is an inverse and shoulder pattern, and you're trading above the 50 days moving average. But mind you, if you go to the weekly chart, which is more important, it is below the 50 weeks moving average. And it could be all in all, not a daily inverse and a shoulder, but rather a weekly inverse ABC pattern. So I think that you shouldn't jump the gun here with the Russell 2000. You got to see the data coming out Friday and then make a judgment because you could be too influenced by the daily charts, inverse and shoulder. You look at Apple Big Kahuna daily chart, closing below the 50 days moving average in blue, closing below the previous resistance 207.50. And right now, I think that the next stop would be heading down, revisiting 200 and then 196.5. I just don't see a reason here for Apple to trade higher unless we have a resolution with the trade war with China. You look at NVIDIA a little better than Apple, so I would use NVIDIA right now as a hedge. If you're shorting anything in the big caps, if you're shorting the indices, grab some short-dated calls in NVIDIA. That should do it as a hedge. But for folks who want to speculate on a top and a pullback or a reversal at this point, I think you got easier names to pick on, weaker names to pick on. You don't want to pick on the strong right now because the strong could head all the way to 145 before it finds legitimate resistance. You got to see it here closing below the 20 days moving average. Better yet, 130 before you have a degree of comfort that the top is in, there's a failure, but we have more downside to come. Looking at the souffle Tesla 2 hours chart, what do we see here? The topping in and shoulder is playing out. We closed below the important number, and now we're consolidating in a bear flag pattern. I think if this continues, because you got to remember one thing, if it's going to get ugly between Trump and Elon, then Trump might say, you know what, I'm going to do regulations against your robo-taxis. I'm going to start to fight back. And if it gets ugly between Trump and Elon, you lose a huge catalyst, a friendly government regulation for Tesla. But aside from that, that's the fundamental reason. The technicals right now suggest that we have a revisit the previous consolidation zone in or around 315, 320. And then after that, we can go down and close the gap in its entirety. That's about 300. Then I want to share with you some bonus charts here that might have topped, beginning with CEG Constellation Energy. What you're looking at is the weekly chart. We have a bearish reversal hammer candle, at least right now, on higher volume. And when a stock gets good news and opens gapping higher, as we've seen with Constellation Energy yesterday, based on the news that Meta is going to invest whatever billion trillions getting energy from Constellation. And the response by investors is to dump and sell the news. Classic sign for a top. We see another one in WFC, Wells Fargo. Overnight, we got the news that the Fed is lifting the ceiling of the value of assets that Wells Fargo can hold. Investors, the algos pumped the stock higher by 2.5% or more in the pre-market session. The session opens, and investors' response is to sell the rip, sell the news. So we have a classic bearish engulfing candle, classic bearish daily candle. Can we go down and revisit the 50 days moving average? Sure. I think that could be a viable destination. Furthermore, you look at the weekly chart for Wells Fargo. Failing this week to trade higher means that we have a topping head and shoulder pattern. We're not just going to go down the 50 days moving average, but perhaps the 50 weeks moving average. Let's move on to the conclusion of this video. What do we have in the economic calendar tomorrow? Got initial jobless claims. Now it becomes more important than ever because does it confirm the ADP or does it negate it? Then we got the U.S. trade deficit, U.S. productivity, along with a bunch of Fed zombies talking after that. On the earnings calendar, anything interesting? We got AVGO. I'm betting against this son of a bitch because I lost in a trade a couple of weeks ago. I had to take a loss. So I'm hoping it's going to crash and I'm going to have a bet against it. And if it doesn't work out, hey, that's why we have cat food. Anyhow, we also have Lululemon, along with DocuSign, all important earnings, pulse on the consumer. We have Transformant too, which has exposure to the European market liquor with all of the tariff talk. What do they see? We'll find out, folks. But for now, I hope you enjoyed the coverage tonight. Thank you for joining us. This is all I got for you. Thank you for listening. Thank you for watching. I appreciate and love both of you. I'll be talking to you again tomorrow. Good night.